If you don't want to lose money, your dream home, or your time, when it comes to writing an offer on that fantastic home you've been eyeing, then stay tuned because you don't want to make these huge mistakes I see a lot of buyers and their agents make when submitting an offer with a contingency. Okay, so what even is a contingency and how can you use it correctly when trying to nab your future home? Amanda Rivard, local McKinney, Texas Realtor here, and today, friends, we are talking all about contingencies. The word contingency gets thrown around a lot in real estate, but what does it mean? Contingency is a condition that must be met for a real estate contract to become legally binding. I'll explain the two most common ones in just a minute. Contingencies, when needed, can play an important role in protecting buyers from potential giant financial loss and ensuring a fair transaction. So what are the two main types of contingencies in your typical real estate contract? Loan contingencies. These ensure that the buyer can secure financing for the home purchase. Then we have appraisal contingencies. These ensure that the home's appraised value matches or exceeds the purchase price. First, let's dive into the explanation of how loan contingencies work and some examples of them. The major loan contingency that you need to understand, and truly it is there to protect you as a buyer, is on our third-party financing addendum here in Texas. This portion of the contract states that the buyer must qualify for full mortgage approval within a specified time frame. The buyer's agent will write your needed amount of days to obtain approval into that financing addendum. That way, if financing falls through and for whatever reason you don't get approved for your home loan within that specified amount of days, the buyer can actually back out of the contract without penalty. If this isn't done correctly and within a realistic time frame for approval, and let's say you don't end up getting approved for your home loan, you could lose your earnest money, which is typically 1% of the sales price, or the home, or even risk being sued, and nobody wants that type of drama and stress in their life. Luckily, there are steps to take to ensure that it doesn't happen, which is why understanding your pre-approval, loan terms, and the purchase contract is crucial before deciding how many days you need this time frame to be before submitting your offer. A good agent will work very closely with your loan officer to ensure that this happens correctly and will protect your best interest. However, I've had agents not do this properly, and it can really cause a sticky situation for the buyer, and trust me, you don't want to deal with it. Work with your loan officer and then your agent to determine how many days you need based on your individual loan approval situation, and then I suggest to add a few buffer days in there just to be safe. You do not want to be stuck in a contract without financing or to lose your earnest money deposit. Okay, so next up, what is an appraisal contingency? After an offer is accepted on the home you've chosen, the lender orders an appraisal to determine the home's market value. If the home appraises for less than the purchase price you have agreed upon with the seller, then the buyer can negotiate that price with the seller or walk away, but only if the contingency is written correctly. Factors that influence the appraisal value is comparable sales in the area, the condition of the home, and really the current market trends. Now, if you are using VA financing, this contingency is actually pretty straightforward when your agent is writing the contract. This actually also gets included on the financing addendum that I mentioned earlier. For example, if you are using VA or FHA financing and you're writing an offer on a house for $350,000, on the financing addendum, you want to be sure in the blank spot provided in regards to what the home must appraise for, that it also says $350,000. That means that if the home were to appraise for anything less than that $350,000, that you do have the option to back out and you're not left holding the bag. I've seen this done incorrectly and you don't want to be liable. So again, Having an understanding of the contingent parts of your home contract really is crucial. With a conventional loan contract, however, there is more flexibility on these contingencies. Where we see the need for this flexibility is during a multiple offer situation. Let's say you're dying to get this house, so you are willing to submit an offer over the current list price of the home, and you know financially that you could cover the difference or some of the difference in sales price on your contract versus the appraised value. If the appraisal value came in lower than the sales price, there is a special financing contingency addendum that states if the home were to appraise for less than the purchase price on the contract, that you would be willing to cover X amount of dollars over the appraisal value to get the home. Okay, I admit it sounds confusing, so here's an example. You fall in love with this home listed for $350,000, but there's 10 other people also in love with the home who are submitting offers. Let's say you want to then offer $365,000 because you really want the home. That is $15,000 over the list price of the home itself. If the home also appraises for $365,000 or more, that's great. It gets rolled into your loan and no extra will be coming out of pocket. But let's say it only appraised for $350,000. What most commonly happens is that it would go back into negotiation at that point. The seller could lower the contract price back to $350,000. The buyer could cover that $15,000 out of pocket to get the home, or you could even split the difference. That's all negotiable. In a multiple offer situation though, if you want a chance to win the house, especially when you're competing with other buyers, you better have a financing addendum stating how much of that difference you're willing to make up of that $15,000 if you want to have a chance of the seller accepting your offer over somebody else's. You really want to be certain financially that you can swing it before you submit an offer in this way. I've seen buyers make the fatal mistake of not being aware of how much additional, including down payment and closing costs, that they would have to bring to the table if this were to happen. Do not miscalculate. If you have the $15K to cover the difference on top of your down payment and closing costs, great. But if you only have $5,000 additional to safely put towards covering the difference needed, then you really want to make sure that your addendum contingencies state that you can cover up to $355,000 of sales price. It may not look as great to a seller in a multiple offer situation, and they may not choose your offer, but it's a lot better than promising the ability to pay up to $15,000 over the list price if you don't have the financial means to do so. Please don't put yourself in a bad situation because you're desperately wanting a specific home. It's not worth it, and trust me, there will always be other homes. Okay, so what are the best practices for managing contingencies? Work with a reputable lender and a real estate agent who can guide you properly. This part is so important. Understand the terms and implications of each contingency. Communicate openly and promptly with all parties involved. Avoid making impulsive decisions under pressure. Pay very close attention to what is realistic for you when it comes to contingency timeframes and appraisal contingency amounts so that you don't get screwed over in the end. Contingencies play an important role in the home buying process, and really they are there to protect the buyer, but only if done correctly. Educating yourself by speaking with a reputable realtor or loan officer when dealing with contingencies is crucial. If you have any questions on contingencies or just the buying or selling process overall, I am here to help. Reach out and we can chat. All my info is below. Like, comment, and subscribe for more valuable insights on real estate and home buying. Until the next video, y'all take care.